Hello students. Now we have done with all the basic concepts, all the basic points have been covered. So today is the time we shall be starting with the practical questions. Important point to be noted, before we start with this practical question, make sure that you all have revised with difference in amalgamation of merger and purchase, methods of purchase consideration, accounting entries in the books of transferor company, accounting entries in the books of transferee company by pooling of interest method as well as purchase method of accounting. Okay, all these 4 points, important points what we have done so far, you should all revise it properly before watching today's lecture. If you haven't, then pause the lecture right now, stop the lecture right now, take half an hour, go through all those points and then come back and watch this lecture. Okay, we take up with question number 1 of amalgamation. Okay, all of you take out in your study material question number 1 and do the markings as I am doing it ideally. The following are the balance sheet of Alpha Limited and Beta Limited as on 31st March 2019. Share capital of rupees 10 per equity share 15 lakhs. 15 lakhs divided by 10. 1,50,000 would be the number of equity shares of Alpha Limited. 6 lakhs divided by 10. 60,000 would be the number of equity shares of Beta Limited. Security premium is a reserve 1,50,000. Capital reserve is a reserve in Beta Limited 15,000. General reserve and profit and loss account is also a reserve. 10% debentures are there only in Beta Limited's books 2 lakhs. Creditors are there in both the books. Land and building only in Alpha's books. Plant, furniture, stock, cash and bank in both the books. Other information now. The two companies agree to amalgamate and form a new company called Gamma Limited. Now Gamma Limited is the new company, that is transferee company, market as EE. Old companies Alpha, Beta going into liquidation, so they are transferor companies, market as OR. I repeat, Alpha Limited and Beta Limited are going into liquidation, they are transferor companies, mark them as OR. Gamma Limited is the new company formed, mark it as transferee company EE. Now this new company, I repeat this sentence, the two companies agree to amalgamate and form a new company called Gamma Limited, which takes over all assets and liabilities of both the companies. Underline all assets and liabilities. At the end of the question I'll tell you why. All assets and liabilities of both the companies on 1st April 2019. The consideration is agreed at rupees 19,50,000 and rupees 6,80,000 for Alpha Limited and Beta Limited respectively. So all of you underline this also. What is the relevance? I'll explain you later on. The consideration is agreed at rupees 19,50,000 and 6,80,000 for Alpha Limited and Beta Limited respectively. And the entire amount being payable by Gamma Limited in the form of its fully paid equity shares of rupees 10 each. After 10 each, make it a full stop. Okay, after 10 each, there should be a full stop. So this also all of you underline, entire amount payable in the form of equity shares. Underline that. Entire amount payable in the form of equity shares. Again, relevance, I'll discuss it at the end. Now after this 10 each, full stop. Beta Limited, now here there should be no full stop. Beta Limited's 10% debentures are converted into identical number of Gamma Limited's 11% debentures of rupees 2 lakhs. So 10% debentures, if you remember, we discussed it in the last lecture that in transferee companies books, last entry, settlement of liabilities, I told you generally it would be debentures to debentures. If you all have watched that video lecture carefully, I discussed at that point of time that generally debenture holders and creditors may create an obstacle in this amalgamation. So to satisfy them, you tell them that you allow this amalgamation. In old company you were getting 10% debentures, in new company you will get 11%. So rate of interest will increase. Okay. Now this will not affect the books of transferor company. Transferee companies, that last entry, 7th entry will be included, settlement of liability. Okay, so this will affect only 7th entry in the books of transferee company. Okay, this which part? Beta Limited's 10% debentures, okay, are converted into identical number of Gamma Limited's 11% debentures of rupees 2 lakhs. This will affect the 7th entry in the books of transferee company. No other relevance. Expenses of amalgamation amounting to 15,000 underline are borne by Gamma Limited, that is transferee company. So entry of expenses will come in the books of transferee company only. Okay. Gamma Limited is paying for expenses. We studied that liquidation expenses of transferor company paid by transferee company in the last lecture. So entry of this expenses, since it is paid borne by Gamma Limited, the entry will come in the books of Gamma Limited only. Now what all is asked? Pass journal entries and prepare important ledger accounts to close the books of Alpha Limited as well as Beta Limited. I told you in the last lecture, Alpha Limited transferor company, Beta transferor. So 14 entries in the books of Alpha, 14 entries in the books of Beta. And we have to make important ledger accounts also. So 4 ledger accounts in Alpha's books, 4 ledger accounts in Beta's books. Also pass journal entries in the books of Gamma Limited, 7 entries in the books of Gamma. Ideally 14 plus 14, 28 plus 7, 35 entries we are going to study in today's lecture. And prepare its balance sheet immediately after amalgamation. We also have to make balance sheet of Gamma Limited after passing its journal entries. Now listen carefully, this video lecture we divide in 2 parts. In this lecture we will cover only the entries of Alpha Limited and Beta Limited. Otherwise you will not be able to digest so much in one lecture. Okay, in this video lecture we'll cover only the entries of Alpha Limited and Beta Limited. And in the next video lecture I will cover with the entries in the books of Gamma Limited and its balance sheet. So we'll divide this question in 2 video lectures. Okay. Now all of you first understand one thing. Whenever we read a particular question, we need to identify, okay, we need to identify number 1, is it amalgamation in the nature of merger or purchase? Very first thing, we have to identify, is it merger or purchase? So how to identify, is it merger or purchase? I told you there are 3 conditions of merger. Those 3 conditions we will test in this question and first find out, is it merger or purchase. Okay. First condition, all assets and liabilities should be taken over. You can see in this second sentence I made you underline, which takes over all assets and liabilities of both the companies. So first condition of merger is satisfied. Second condition of merger, at book value. In the entire paragraph, do you find any agreed values of land and building, plant, furniture, stock, cash in bank, debentures? Only debentures value is given, but that is also book value only. 2 lakhs is the same value appearing in the balance sheet. So all assets and liabilities, no other information is given except debentures, means all other assets and liabilities are taken at book value. And even debentures, what information is given is book value only, that is 2 lakhs. So second condition of merger is also satisfied, that all assets and liabilities are taken at book values. And third condition of merger, entire purchase consideration should be settled in the form of equity shares. You all can see here, I made you underline, entire amount payable in the form of equity shares. Third condition is also satisfied. So it is amalgamation in the nature of merger. It is not purchase. So very first thing you have to do in every question of this chapter is identify, is it merger or purchase. Here it is merger. because condition 1, all assets and liabilities are taken over, is satisfied. Condition 2, they all are taken at book values, no other values are given in the question. Condition 3, entire amount is payable in the form of equity shares, is also satisfied. So very first thing we conclude in this question that it is amalgamation in the nature of merger. What relevance it will have? When we pass the entries in the books of Gamma Limited, transferee company, because it is merger, we will be following which method? Pooling of interest method when we pass those entries. Okay, so this will help us in identifying that because it is amalgamation in the nature of merger, Gamma Limited's books, we will be passing those 7 accounting entries which we studied in the last lecture by pooling of interest method. Now second thing what you have to do in this, every question in this chapter, identify the method of purchase consideration. I repeat, identify the method of purchase consideration. Okay, we discussed there are 3 methods of purchase consideration: lump sum, net payment, net asset. Now in this question, look at this third sentence. The consideration is agreed at rupees 19,50,000 and 6,80,000 for Alpha Limited and Beta Limited respectively. So it is which method of purchase consideration? Write down lump sum method of purchase consideration. Because the purchase consideration amounts are directly given. For Alpha Limited 19,50,000, for Beta Limited 6,80,000. The purchase consideration is directly given, so it is lump sum method of purchase consideration. So what's the benefit? No workings are involved of net payment method and net asset method, which we did in the earlier lectures. In this first question, those workings are not involved because the purchase consideration is lump sum method directly given. Okay. So these 2 things you have to identify in every question. Is it amalgamation in the nature of merger or purchase? And secondly, is it lump sum method or net payment method or net asset method of purchase consideration? Based on merger or purchase, you will decide that in transferee company books, we have to apply pooling of interest method or purchase method of accounting. Okay. Now let's start with the solution. Pass journal entries and prepare important ledger accounts to close the books of Alpha Limited and Beta Limited. Now listen carefully. Both are transferor companies, Alpha and Beta. Make the formats for both of them. Pause the video and make the formats which I tell you. I will explain you the entries of Alpha Limited. Exactly same are the entries of Beta Limited. So you first make the entries of Alpha Limited, then you pause the video, try the entries of Beta Limited on your own, and then you play the video and verify. I'll discuss the entries and answers. You verify whether you have done it correctly or not. So it will be a self-practice on your own. If you are able to do Beta Limited on your own, after I explain you Alpha Limited, means transferor company's 14 entries are clear to you. What all formats are required? See it carefully. You can pause the video and make it. First, make journal entries in the books of Alpha Limited format. Make the format of 1.5 page. Journal entries in the books of Alpha Limited 1.5 page format. Then realization account, make 1 page format. Realization is a normal ledger account with particulars and amount on both the sides. Then equity shareholders, make around 10 lines format. Then Gamma Limited, make 5 lines format. And equity shares of Gamma Limited, make 5 lines format. I repeat it. You do this for Alpha Limited first, then you pause the video and you'll do it on your own for Beta Limited. Okay. So what all things you'll make in the books of Alpha Limited? Journal entries in the books of Alpha Limited 1.5 page. Which all ledger accounts are required? Realization account is to be opened, so one page of realization account. Equity shareholders account around 10 lines. Now who is the transferee company? Gamma Limited. So transferee company Gamma Limited accounts format of around 5 lines, and equity shares we are getting in consideration. So equity shares of Gamma Limited account format of 5 lines. All of you pause the video and make these formats first, okay? And then we continue further, okay? Okay, so I hope everyone would have done the formats after pausing the video. Now let's start with the journal entries, okay? We'll be doing journal entries and ledger accounts all simultaneously. Now, we discussed that in the books of transferor company, first 6 entries are to close all the accounts appearing in the balance sheet. Okay, we discussed in that first entry is realization account debit to assets account. So all of you write down realization account debit. Now to assets account means we have to take the assets from the balance sheet. So to land and building account 5,60,000. Okay, Alpha Limited only right now. To assets account means from the balance sheet you'll take the values. To land and building account 5,60,000. All first 6 entries will come at book value, and we studied that in first entry all assets are transferred to realization account whether taken over or not. So all assets will be included. To plant account 9,42,000. To plant account 9,42,000. Then to furniture account 1,01,500. To furniture account 1,01,500. To stock account 5,37,340. To stock account 5,37,340. To cash and bank account 4,01,590. To cash and bank account 4,01,590. Now all of you add it up. It must come, because all assets are taken from the balance sheet. It will come to 2542430. But you can cross check in calculator also. You can add it. 5,60,000 plus 9,42,000 plus 1,01,500 plus 5,37,340 plus 4,01,590. It must come to same value 2542430. Okay, so this is the first entry passed, being closing all the assets. Write down being assets transferred to realization account. Being assets transferred to realization account. So the effects in realization account will be realization account debit, means in realization account we'll write on debit side opposite account to assets account. Now in assets we'll mention all the assets. So land and building with 5,60,000. Everyone must be writing it. Then plant and machinery with 9,42,000. All the assets will be recorded on debit side. Then after plant and machinery, we have furniture with 1,01,500. Then after furniture, we have stock 5,37,340. Then after stock, we have cash and bank 401,590. Okay, cash and bank 401,590. Total will come to 25,42,430. 25,42,430. Okay. Now if you keep it in mind that first 6 adjustments will have only one effect. I repeat it. First 6 adjustments will have only one effect because the other effect is the account gets closed. So realization account debit means in realization you write on debit side, and to assets account means all the assets which are in the balance sheet have debit balance. We credit them, so these accounts now get closed. So second effect will not take place because in the second effect one or the other account is getting closed in the first 6 entries. Okay, first 6 entries are closing entries. So first 6 entries will have only one effect visible because the other effect is the account gets closed. Now second entry after realization, closing transfer of assets, second is for liabilities. You all can see here there are two liabilities, debentures and creditors. So liabilities account debit means debentures account debit with two, okay, debentures is not there in Alpha Limited's books. Right now we are passing the entry only in the books of Alpha Limited. So in Alpha Limited's books there is only one liability, that is creditors, 233070. Now creditors account debit, liability account debit means they have credit balance, to close it with reverse and debit. So creditors account debit, only one liability is there with 233070. Okay, 233070. And to realization account 233070. Okay, to realization account 233070. So closing of liabilities is also done. Okay, being liabilities transferred to realization account. Being liabilities transferred to realization account. Now, as I said, all first 6 entries will have one effect only, to realization. So in realization, we'll write it on credit side. Now, since there is only one liability, no need to give the heading liabilities. Straight away you can record by creditors account 233070. Okay, straight away we can write to by creditors account 233070. So single effect only for this. Okay, two realizations, so realization on credit side, opposite account by creditors account 233070. Now I told you the order of entries is important, you must remember that. So assets, liabilities, then equity share capital. Now in Alpha Limited's books, all of you can see equity share capital is 15 lakh rupees. It's a credit balance, to close it we reverse and debit it. So equity share capital account debit with 15 lakhs. Okay, equity share capital account debit with 15 lakhs to equity shareholders account. Now, equity share capital, we will be transferring it to equity shareholders account. $15 lakhs. Being equity share capital transferred to equity shareholders account. Being equity share capital transferred to equity shareholders account. Now, first 6 entries, how many effects? Single effect. 2 equity shareholders, so equity shareholders on credit side. 2 equity shareholders, so equity shareholders on credit side by equity share capital account 15 lakhs. By equity share capital account 15 lakhs. Okay, so third entry is also passed, closing of equity share capital. Now what did I tell you the order of entries? Assets, liabilities, equity share capital, preference share capital. But here we don't have preference share capital. Only share capital is given, which is quite obvious that is going to be equity share capital only, because without equity share capital company cannot be formed. So when only share capital given, then it has to be equity share capital only. Okay. Preference share capital we don't have, so that entry will not come. All 14 entries will generally not be there in every question. In between, some entries will not be there depending on the information in question. Here we don't have closing entry of preference share capital. Next is reserves. Now in reserves we have security premium in the books of alpha, capital reserve is not there, and we have general reserve in the books of alpha and profit and loss account. Okay. So 3 reserves are there: security premium, general reserve and profit and loss account. Now reserves have credit balance, to close it we reverse and debit. So security premium account debit with 1,50,000. Okay, security premium account debit with 1,50,000. Then next reserve, capital reserve is not there in alpha's books. General reserve account debit 4,70,000. General reserve account debit 4,70,000. Then next reserve is profit and loss account. So profit and loss account 1,89,360. Profit and loss account debit 1,89,360. And this all will be transferred to equity shareholders account. So to equity shareholders account with a total of 1,50,000 plus 4,70,000, that is 6,20,000 plus 1,89,360, that is 8,09,360. Being reserves transferred to equity shareholders account. Being reserves transferred to equity shareholders account. Now again, first 6 entries, how many effects? Single, very good. 2 equity shareholders, so equity shareholders on credit side by all the 3 accounts, by equity shareholders on credit side by security premium account 1,50,000. Then by general reserve account now by general reserve what amount? 4,70,000. And then by profit and loss account what amount? 189,360. Okay, by profit and loss account 189,360. First 6 entries would have single effect only. Okay, so basically this was fifth entry, preference share capital entry was not there. Now next entry after closing of reserves is fictitious assets. Okay, now fictitious assets means what will you have? Either in P&L account, here you would have a negative balance. Okay, this would be a negative balance given in bracket, then you can consider it fictitious asset. Or else I told you other non-current assets. Now asset side we don't have any item of other non-current assets like discount on debentures, preliminary expenses. These are fictitious assets. In short, in this question there are no fictitious assets. So even sixth entry will not come. So practically when we have solved the question, out of 6 entries we have only 4 closing entries. Okay, out of 6 entries we have only 4 closing entries. Now 7th entry onwards what we studied, every entry will have 2 effects. Okay, so next entry onwards, purchase consideration onwards, every entry will have 2 effects. So next is for purchase consideration due. Now transferee company account debit, so here Gamma Limited account debit. Okay, purchase consideration is receivable from Gamma Limited, debit the receivable, Gamma Limited account debit, and it is our income, credit all incomes and gains, so to realization account. Now right now we are passing the entries in the books of Alpha Limited. So see in Alpha Limited, what is the purchase consideration? 19,50,000 is the purchase consideration of Alpha, okay, and 6,80,000 is for Beta. So for Alpha it is 19,50,000. So amount receivable from Gamma Limited is 19,50,000 and to Gamma Limited account, to realization account 19,50,000 being purchase consideration due. Being purchase consideration due. Now effects. First, generally try to give the effects in realization if possible. To realization, so in realization we will write on credit side by Gamma Limited account in bracket purchase consideration, just for understanding it, 19,50,000. Now by Gamma Limited, so Gamma Limited account debit means in Gamma Limited account you'll write on debit side opposite account to realization account 19,50,000. Now remember everyone, 7th entry, that is purchase consideration entry onwards, every entry will have 2 effects. First 6 closing entries have only 1 effect because the other account gets closed. But from purchase consideration onwards, every entry will have 2 effects. So to realization means in realization on credit side opposite account by Gamma Limited 19,50,000 and Gamma Limited account debit, so in Gamma Limited on debit side to realization 19,50,000. Then after purchase consideration due, purchase consideration received. Now all of you look at this paragraph. How is purchase consideration received? See in this paragraph, this sentence. Entire amount, I made you underline, entire amount payable in the form of equity shares. Means this entire 19,50,000 we have received in the form of equity shares of Gamma Limited. So we studied the entry, equity shares comes in, debit what comes in. So equity shares of Gamma Limited account debit with 19,50,000 and Gamma is the giver, credit the giver to Gamma Limited account 19,50,000. Okay, I repeat it. Purchase consideration is received in the form of equity shares. So equity shares comes in, debit what comes in, equity shares of Gamma Limited account debit. Gamma is the giver, credit the giver to Gamma Limited account. Being purchase consideration received. Being purchase consideration received. Now, every entry now onwards will have two effects. Equity shares of Gamma Limited account debit to Gamma Limited. To Gamma Limited means all of you write in Gamma Limited on credit side. How is this purchase consideration discharged? By equity shares of Gamma Limited account. 19,50,000. Okay. How is this Gamma Limited 1950 discharged? By equity shares of Gamma Limited 1950. This account gets closed. Gamma Limited account immediately with this entry gets closed. Now, equity shares of Gamma Limited account debit means in equity shares of Gamma Limited you'll write on debit side to Gamma Limited account 19,50,000. Okay, to Gamma Limited account 19,50,000. I repeat it. Equity shares of Gamma Limited account debit, so in equity shares account debit side to Gamma Limited 1950 to Gamma Limited, so Gamma Limited credit side by equity shares of Gamma Limited 19,50,000. So purchase consideration received entry is also done. Now after purchase consideration received, understand it everyone. Seventh entry is for sale of assets which are not taken over. Here there are no assets which are not taken over because look at this second sentence. Gamma Limited takes over all the assets and liabilities of both the companies. So there are no assets which are left out to be taken over and to be sold by Alpha Limited itself. So this entry also we don't have in this question. Sale of assets which are not taken over entry we don't have because all assets are taken over. Okay, this entry we don't have. Next entry in the order is payment of liabilities which are not taken over. This also we don't have because it is given it takes over all assets and liability. So even liabilities are taken over by Gamma Limited. There is no liability to be paid or discharged by Alpha Limited itself. Okay, so we don't have the entry of sale of assets because all assets are taken over. We don't have the entry for payment of liabilities because all liabilities are taken over. Next entry in the order we studied. Okay, all of you can keep these entries in front of you when you are solving so that you understand. Next entry, payment of expenses, liquidation expenses paid by transferor company. Now here we do have expenses. Last sentence, expenses of amalgamation amounting to 50,000. But who is paying it? It is borne by Gamma Limited. So we are going to pass this entry in the books of transferee company. In the books of transferor company, no entry. Okay. So expenses are borne by Gamma Limited means entry of this expenses will come only in the books of transferee company. So even liquidation expenses we don't have any entry here in the books of Alpha Limited. Okay. No entry for sale of assets, no entry for payment of liabilities, no entry for liquidation expenses, and no entry for preference shareholders payment because we don't have only preference shares. There are no preference shares in this question. There are no preference shareholders in this question. So question of payment to preference shareholder does not arise only. So 4 entries in the order. In this question we don't have. Other questions you'll have it. Which 4 entries we don't have? Sale of assets is not there. Payment of liabilities is not there. Payment of liquidation expenses is not there. Payment to preference shareholder is not there. Now 13th and 14th, last 2 steps. I told you instead of entries just remember the steps. Realization account will be closed and transferred to equity shareholders account. So first we'll do balance of realization account. Realization debit side seems to be more. So realization account will be closed and transferred to equity shareholders account. 25 lakh 42,430. Okay, 25 lakh 42,430. From that we will minus 25 lakh 42,430 minus 2 lakh 33,070 and further minus 19 lakh 50,000. So there is a loss of 359,360. Okay, 25 lakh 42,430 minus 2 lakh 33,070 minus 19 lakh 50,000. So there is a loss of 359,360. What did I tell you? Just close realization account and transfer it to equity shareholders account. So by equity shareholders account, in bracket, it's a loss to be borne by equity shareholders, balancing figure. Now, in equity shareholders, you write it on opposite side, debit side to realization account. Okay, to realization account, this amount of 359,360. 359,360. Okay, realizations 359,360. Now what journal entry will come? Very simple entry. In equity shareholders account, it is on debit side. So equity shareholders account debit. Okay, directly from the ledger account you derive the entry. Equity shareholders account debit 359,360. Once again I repeat, how do you get this? In equity shareholders account, we have made this entry on the debit side. So equity shareholders account debit. And in realization account, we have made this entry on the credit side. In realization account, we have made this entry on the credit side. So to realization account. Okay, to realization account 359,360. So that's why if you all remember, in the past video lecture I told you no need to learn the entry of profit or loss. Just remember the steps. That realization account will be closed and transferred to equity shareholders account, and journal entry can be derived from that ledger only. In equity shareholders you write on debit side, so equity shareholders account debit. In realization account it is on credit side, so to realization account 359,360 being loss on realization, transferred to equity shareholders account, being loss on realization transferred to equity shareholders account. Okay, and the last entry also I told you, don't remember the entry, just the step. I told you 13th step, transfer realization to equity shareholders account. 14th step, all the remaining accounts transfer to equity shareholders. Let us see which accounts are remaining. Realization gets closed. Other than equity shareholders, Gamma Limited gets closed. Only one account is remaining, equity shares of Gamma Limited. So this you will transfer to equity shareholders account by equity shareholders account. Okay, remember this shortcut I told you for last two. After you transfer realization account to equity shareholders account, all the accounts, ledger accounts which are remaining, you close and transfer that to equity shareholders account, because whatever is left out when a company goes into liquidation goes to equity shareholders. So this 19,50,000 of equity shares we will be giving to equity shareholders only. So by equity shareholders account, balancing figure. Okay, whichever accounts are left out, you remember you close and transfer to equity shareholders account. 19,50,000. And in equity shareholders account, it will come on debit side. In equity shareholders, it will come on debit side to equity shares of Gamma Limited account 19,50,000. to equity shares of Gamma Limited account. Okay, to equity shares of Gamma Limited account 19,50,000. Again entry, derive it. Equity shareholders, it's on debit side. So I repeat, equity shareholders, it is appearing on debit side. So what will we do in the journal entry? Equity shareholders account debit. Okay, equity shareholders, it is on debit side. So equity shareholders account debit. And in equity shares of Gamma Limited account, it is on credit side. So to equity shares of Gamma Limited account, amount is 19,50,000. Okay, all of you can see this. Equity shareholders, it is on debit side. Opposite account to equity shares of Gamma Limited account 19,50,000. Equity shares of Gamma Limited, it is on credit side. So two equity shares of Gamma Limited account 19,50,000. And otherwise also logical entry. Equity shareholders are the receiver. Debit the receiver. Equity shareholders account debit. Okay, we are doing their settlement. And we are giving them what? Equity shares. So equity shares goes out. Credit what goes out to equity shares of Gamma Limited account. But you remember that shortcut. After closing realization account, whichever other accounts are left out, all of them you close it and transfer to equity shareholders account. Being equity shareholders settled. Being equity shareholders settled. Okay. And what did I tell you lastly? Equity shareholders account must get tallied. It must get closed. Okay. Equity shareholders account must get tallied or closed. So if you do equity shareholders accounts total, you can see that 3,59,360 plus 19,50,000, it comes to 23,09,360. 23,09,360. Same amount you must get on the credit side, cross verify. 15 lakhs plus 1,50,000 plus 4,70,000 plus 1,89,360. That comes to 23,09,360. So equity shareholder account gets tallied means mostly your answer is correct. Okay. So this is how we pass the entries in the books of Alpha Limited. Now all of you pause the video. I repeat, don't see it further. Pause the video. And as we did this entire procedure in Alpha Limited's books, same procedure all of you do it in Beta Limited's books. Same thing. Okay. 1.5 page format of journal. Then realization account 1 page, equity shareholders account 10 lines, 5 lines Gamma Limited account, and 5 lines equity shares of Gamma Limited account. So pause the video and same entries. Beta Limited is also a transferor company. So look at the adjustments, look at the balance sheet, find out the figures of Beta Limited, and same entries, same 8 entries you will have. So same 8 entries and posting in realization and equity shareholders and Gamma and equity shares, do it simultaneously it in the books of Beta Limited. Okay, do it simultaneously. Pause the video and do it. And after you finish it, then again play the video. You'll have answer in front of you ready. And I'll discuss that answer. You'll verify whether you have done it correct or not. So all of you try it on your own for Beta Limited. Pause the video, try it on your own. Go ahead with it, please. Yes, so all of you should have completed the entries of Beta Limited. Now I'm discussing the answers and all of you verify you have done it right or not. So first entry in the books of Beta Limited to close the assets, realization account debit to assets account. Now you all can see in the books of Beta Limited, realization to assets means land and building is not there. So to plant 3,60,000, to furniture 89,500, to stock 2,52,410, to cash and bank 1,18,190. Okay, verify your first entry everyone. Have you done it right or not? Realization account debit 8,20,100, to plant 3,60,000, to furniture 89,500, to stock 2,52,410, to cash and bank 118,190. Narrations I am not discussing, they are going to remain same as in the previous question. Now posting, I told you first 6 entries will have single posting only because the other effect is account gets closed. So in realization account, all of you check on debit side. Okay, realization account, everyone check it on debit side. To assets account, plant, furniture, stock, cash and bank, total 8,20,100. Second entry, check it up. Liabilities to realization. In the balance sheet, you all can see in books of Beta Limited, we have 10% debentures of 2 lakhs in liability as well as creditors of 5,100. So liabilities account debit means here the entry will be 10% debentures account debit 2 lakhs, creditors account debit 5,100, to realization account 2 lakh 5,100. Now to realization means all of you see in realization credit side by 10% debentures account 2 lakhs and by creditors account 5,100. Okay, even if you are given the heading liabilities and written within that, it's okay, it's correct. Then third entry is to close equity share capital. You all can say 6 lakhs is the amount of equity share capital. So equity share capital account debit with 6 lakhs, equity share capital account debit 6 lakhs, to equity shareholders 6 lakhs. Now to equity shareholders means in equity shareholders you'll write on credit side by equity share capital account 6 lakhs. Okay, single effects for first 6 entries. Now preference share capital we don't have. Reserves we have only capital reserve of 15,000. So capital reserve account debit 15,000. Okay, capital reserve account debit fourth entry 15,000, to equity shareholders account 15,000. To equity shareholders means all of you can see in equity shareholders on credit side by capital reserve account 15,000. Then fictitious assets we don't have. I told you fictitious assets means either P&L accounts negative amount would be given or other non-current assets like discount on debentures, shares, preliminary expenses would be there. They are not there in this question. So closing entries are all done. Now purchase consideration you all can see in this paragraph. Beta Limited's purchase consideration is 6,80,000. So for purchase consideration due, Gamma Limited transferee company account debit 6,80,000, to realization account 6,80,000. To realization means realization on credit side by Gamma Limited account 6,80,000 and Gamma Limited account debit. So in Gamma Limited account debit side, to realization account 6,80,000. Okay, you all can verify you've done it accordingly or not. Wherever you find you're doing it wrong, pause the video, make the correction and then play the video. Further, after that receipt of purchase consideration, it is given in the last paragraph that entire amount payable in the form of equity shares only. So this entire 6,80,000 is received in the form of equity shares only. Therefore, equity shares of Gamma Limited account debit 6,80,000, to Gamma Limited account 6,80,000. Now to Gamma Limited account, so in Gamma Limited credit side by equity shares of Gamma Limited 6,80,000 and equity shares of Gamma Limited account debit side to Gamma Limited 6,80,000. I repeat, if you have done anything wrong, pause the video and write it down and then play the video. So check these two effects also of purchase consideration received. Then after that, we don't have any sale of assets as all assets are taken over. We don't have any payment of liabilities as all liabilities are taken over. We don't have any payment of expenses because expenses are borne by Gamma Limited, so entry will come in the books of transferee company. And we don't have payment to preference shareholders as preference shares itself are not there. So step 13 and 14, what are you supposed to do is, first realization account you will balance and transfer to equity shareholders account. Credit side is more here. So realization account credit side 885,100, both the sides same total, minus 8,20,100, 65,000 will be transferred to equity shareholders account. And equity shareholders on credit side by realization account 65,000. Now you'll pass this journal entry. As you can see, it's realization account on debit side. So realization account debit 65,000 and equity shareholders the same entry is on credit side. So to equity shareholders account 65,000. Okay. Seventh entry, realization account debit 65,000 to equity shareholders account 65,000. I repeat, realization account you can see this 65,000 on debit side. So realization account debit 65,000. Equity shareholders you can see same amount is on credit side. So to equity shareholders account 65,000. Okay. Realization account debit to equity shareholders 65,000 being profit on realization transferred to equity shareholders account. And then I told you whichever accounts, whatever balance remains, transfer to equity shareholders account. You'll see equity shares balance will remain. So this 6,80,000 will transfer to equity shareholders account balancing figure. And in equity shareholders, it will come on debit side. 2 equity shares of Gamma Limited 6,80,000. Again, equity shareholders, it's on debit side, so equity shareholders account debit. And equity shares of Gamma Limited, it's on credit side, so 2 equity shares of Gamma Limited account 6,80,000. Last entry, equity shareholders account debit 6,80,000. 2 equity shares of Gamma Limited account 6,80,000. Okay, equity shareholders are the receiver, debit the receiver, equity shareholders account debit, and equity shares of Gamma Limited goes out, credit what goes out, 2 equity shares of Gamma Limited 6,80,000. Journal total will come to 37,45,200. In Alpha Limited's books, you can do the journals total is 1,12,94,220. And after this, you all can verify that equity shareholders must tally. So debit side total also comes to 6,80,000. Credit side total also comes to 6,80,000. Means all the accounts get closed in the books of Alpha Limited as well as Beta Limited. So half the question we have done in this question. Remaining half, that is accounting entries in the books of Gamma Limited, okay, which we have to do by pooling of interest method and its balance sheet, you will have in the next video lecture. Okay, so repeat this video again if anything is not clear, but understand these points very well and resolve this question if required. Right? Bye everyone. Take care.